Traders, welcome back to another price session trading lesson. In this video, we're going to go through the price chart bar by bar. Why? Because every single candle is telling us a story. There is a reason behind every single bar, and by using price action rules, we are able to decipher what the candles are telling us. I'm going to be using price action rules because I want to identify what is the structure. And remember, you always want to have an idea what is the overall market structure, because what happened on the left is going to dictate what's going to happen on the right. And today's session started with a little bit of a bearish bias. We had a break and market created new extreme. The reason why market didn't reverse after break of a channel, because according to trend line rule, we expect for prices to create a new extreme, and after new extreme is tested, we expect for market to enter a brand new phase, correction or reversal. You can see market enter a correction phase, flat EMA, no clear bias, completely stacked consolidation. The broader trend range was established, and after that point, there's a smaller trend working lower, and I have to zoom in and focus on this tight channel because I'm in a trend range. I don't want to draw my channels too wide, and at this point, we have a small channel working lower. Am I thinking about buying? I am not. As long as this downtrend is in play, I cannot go long just yet, and prices are trending lower. And notice, according to trend range rules, because it was a trend range, most breakouts will fail, at least temporarily, and this was breakout to the downside, pull back because it's the failure. It's a breakout pullback pattern. Prices wanted to see and test this breakout area. This was the previous support, now acting as resistance, and the big bearish bar is indicating the sellers are selling it at this resistance, and you expect for prices to create new extreme for this downtrend. So you have new low, first entry short, second entry short. Why am I counting for second entry short? Why am I even bothering to count? Well, because I want to take a high probability setup, which is going to be a two-legged pullback at the key entry point. There's a second entry short, but the bar is very big, closing low, and there's a big tail at the bottom. Not the great signal bar, I can't really take it, but notice the market created new extreme. So which means, remember, ask yourself a question, what is the structure? Structure is mainly a trend range, so I have to pause looking for shorts. We had a downtrend, break new extreme, and we were in a trend range. I'm not looking to sell anymore. If anything, I want to see push above EMA and a possible failed second entry short. But you're breaking below, this is quite concerning. We have a failed second entry short below EMA, but I can't take it, it's below EMA. It worked, yes. But in order for me to take a high probability failed second entry short, I want to see confirmation above EMA, not a horrible stacked area like this. And market created the new extreme even for this small of the channel. I'm going to measure the first leg. Market likes to move in pairs of twos. Second leg. And when I was watching this, I was leaning more bullish. Why? Well, because notice, most breakouts fail. Big bullish push above the EMA, and we are back above the trend range. So at this point, there is still a chance that the market may stay in a trend range. But notice, I was proving wrong, and my analysis has to be adjusted because there is something too bearish. Notice this big bearish bar completely sliced through the support like it's not even there, sliced through the EMA. And this high, the major high, was lower than this. So this is a pivotal moment in today's price action. You barely made it to the middle of the trend range, not even an instant strong sell-off. So this is basically going to dictate that the bias is more bearish, because this is not what is supposed to happen if the structure is going to be trend range. Okay, the support is supposed to hold. The fact that you keep pushing lower is a bad sign for bulls. Advanced trader can already spot that there may be a wider channel like this, but if you're not that advanced, you don't really need it. All you're paying attention to is this bearish downtrend. And notice, prices are testing the resistance again. So what acted as previous support is now acting as resistance. So you can see there's a reason to price movement. Nothing is random. The support is now acting as resistance, which is confirming the overall bearish bias. Once again, according to trendline rule, you expect new low for this downtrend. Can I sell? I cannot. Just a first entry short above EMA. And notice, counting from the lowest low, first entry short, pullback, second entry short. I didn't take it myself. I was very tempted. It was a little bit stacked for my liking, but notice EMA is not in the middle of these bars. The bars are still below, so this is indicating more EMA rejection. And since the second entry short, it's a great high probability setup because the downtrend needs to get new extreme, and the resistance is coming into play, and the EMA keeps rejecting again. So you can see there's a reason to sell. Notice how many bulls must have gotten trapped going long directly into EMA, and notice what a great setup it would have generated. Okay, so at this point, once you see such a strong push down, you have to pay attention to the strong bearish bias. I'm going to copy it, put it at the bottom. You can see rejection here, rejection here, rejection here, and there's a reason why we completely sliced through the EMA and the support like it's not even there. That's because there's a major channel in play, and you can see great pullback and a great second entry short. So at this point, what is the bias? What is the structure? At the beginning, the structure was trailing range, and now it's changing. Can you see the shift in the market structure? Lower highs, lower lows. Right now, it's a brand new downtrend, and we expect second entry short at the EMA. I have a second entry short, but it's so far from EMA, I can't take it. We have possible overshoot, so I have to be leery about that. We have a second entry short fire from EMA. I cannot take it as well. I want to see close to EMA. And another push down. Okay, overshoot should be kind of like a volatile, erratic spike. This is more gradual. So this means that I can treat it as a slightly wider channel. Either way, I got to be careful. I have a new low, first entry short, second entry short. Can I take it? I cannot, because I have short-term option in play. This looks like a one leg up. Okay. And you're bouncing off the trend channel line. I'm going to zoom out in a bit. You can see prices are working higher. We keep trending higher. I'm going to redraw my trend line a little bit wider like this. Why am I drawing my trend line wider like this and not tight like this with the break new extreme? Notice there's a potential argument to be made for overshoot, which can generate strong momentum in the opposite direction. But even if I'm not playing the overshoot, I'm still bouncing at the bottom of the trend channel line. And in every single channel, there's a push phase, correction phase, push phase, which means the brand new correction phase may start. I'm bouncing at the very bottom of the trend channel line. This was very oversold. So for this reason, I'm going to play it safe and draw my trend line to the upside wider like this. We have first entry long, congestion, second entry long never triggered. Second entry long below EMA I cannot take, plus the downtrend is still in play. You never know if you're going to continue working lower. So just be patient. Okay, you're breaking above. Okay, good sign for bulls. Okay, you have a new extreme. So now it's starting to shift, and good sign for bears. Why? Because notice, market likes to move in pairs of twos. First leg up, second leg up, two leg up pullback, and prices are trending to the downside. What I can do is I can play around with the channel a little bit. And notice if I'm going to tweak it just a hair to get tiny little breakout, I'm going to see that I have a little bit of a confirmation right here. So it's confirming the bearish thesis, clear two-legged pullback and new extreme. So this is a sign that the correction phase ended. Notice, two legs up, correction phase ended, new high. Two legs up, correction phase is going to end. How do I know that the correction is going to end? Well, I don't know that. I'm anticipating that because I'm at the key entry point. I have to trust the price action rules and the fact that the smart sellers are going to be selling at the top here. So we have a lower high, which is very tempting, but it feels a little bit too advanced. You can consider taking a chance here, but you definitely need to be more advanced. Now, why am I thinking bearish? Because notice, the broader the two legs are, the chances are higher that the uptrend played out, because drawing a wide channel is just too broad. The bigger pattern will take precedence. The main channel is down. So what I'm looking for, felt second entry long below the exponential moving average. So I'm anticipating for all the bulls to get trapped. The structure is bearish. First entry long, second entry long. First bar we broke below after second entry long triggered. So there's a pullback, there's a failure. I consider this as a failure. But can I take it? Look at the signal bar. Bullish bar, the stop loss has to go above this bar. If you wait for this bar, just context wise, perfect setup. We expect for bulls to get trapped, but really no great signal bar for me to take, unfortunately. And market created push down. Okay, prices are breaking below EMA again. At this point, I drew my channel a bit wider. Why? Well, because I'm drawing against the main trend, corrections tight, and with the main trend, pushes wider channels. So I'm expecting for prices to continue working lower, and notice so many bulls must have gotten trapped going long here on this high low. Am I looking to go long? I'm not. Notice, uptrend played out with the break in new high. Once I see new high, I'm not even thinking about buying, and I have 2 legs up, and we're confirming the key entry point. So only thing I'm thinking about is a failed second entry long or second entry short, and we have new low, first entry short, pullback, second entry short. Great signal bar, great bull trap, and it is also failed second entry long if I'm going to reset the count at the last failed second entry long. So you have first entry long, second entry long failure, and a second entry short. Right, the EMA, great signal bar. I actually took this trade myself, and I was even managing to hold a runner. Okay, prices are correcting to the EMA, and notice almost repeat pattern, not quite, but very similar. Counting from the low, first entry short, pullback, second entry short. Once again, so many bulls must have gotten trapped, going long directly into EMA, one tick higher trap, and instant reversal. You can see the momentum here. Juicy bullish bar, they all got trapped. Juicy bullish bar, they all got trapped. Great high probability setup, second entry short. Am I worried that we have a break in new low for this downtrend? I'm not. These width trend channels can only assist you. Don't be too focused on breaks and new extremes, because the main pattern is down as the big pattern, and you can keep creating multiple pushes to new extreme. You want to pay attention to break a new high of the corrections. The market keeps working lower. Okay. And notice now we have another second entry short. What do you think? Can I take it? I cannot, because we push strongly above EMA. Here we're still mainly below EMA. The bar is too big, ugly, big tail at the bottom. There can be second leg up, there can be breaking new high. We also, it looks like the push phase depleted because this low just breached the last lowest low. So there can be a chance for stronger pullback. I'm not too excited about this. I would like to see a failed second entry long, and we never got it. We have only first entry short, and the market keeps correcting strongly. Okay, so I need to redraw my uptrend a little bit wider like this. I'm expecting the pullback. At the same time, I'm still expecting for prices to create the new low for the downtrend. I cannot sell, however, unless I get a strong push below EMA and some nice downtrend. But since we have this uptrend and may get new high, there's a big chance that we're going to see new high first. And this is exactly what is happening. Big push above EMA, the new high was formed. Okay, so we have new extreme. And once again, I'm going to measure the first leg, copy it, put it at the top. We haven't really reached measured move, but I'm still thinking bearish. I still expect new extreme. Let's see. Okay, EMA is holding. This is not good for bears, and still pushing higher. So I can't really sell, I can't force it. At the same time, I cannot go long. We just had a new extreme. Okay, and notice what is happening. Okay, when you're in a situation like this, notice we have 2 broad legs down. The wider those legs are, that means you're not going to push lower. You want to see clear push below EMA, steep move down like a part of one move. This means you cannot draw a wider downtrend like this. This makes no sense. So the broader it is, the sideways it is, you can't really think about selling. Okay, you're still above EMA. Okay, and you have high low. So you have double bottom, strong push above EMA, and high low. So at this point, local price action is telling us that I can take a scalp here, because we're clearly not going lower just yet. We have a massive push above EMA, and I have a strong signal bar, higher low confirmation setup. Decent setup. Okay, we reach new extreme, but we're still above EMA. And this is quite confusing. This is exactly where you have 2-legged pullback, measured move to the tick. This is the 50% Fibonacci retracement of the big downtrend. It's too bearish overall for me to go long the main downtrend, but it's too bullish this correction for me to sell just yet. So I just gotta be patient. It's unclear. Every single time it's unclear and you feel like you're forcing it, be patient. You want to take a clear setup where everything aligns. This is unclear. Okay, market is trending lower. Can we finally get some nice second entry short? Because once I see the bullish correction too strong, I want to see a little bit stronger proven trend before I'm going to start selling. Selling here, even though bulls are getting trapped, it just feels a little bit premature because this is quite strong. You never know how many pushes higher there's going to be. Okay, and we're back above EMA, and there's not enough momentum because the market is closing. At the very beginning, we had a larger 2-legged pullback where I was expecting lower high below EMA, but it pushed above and formed really bad. So no lower high, and notice we never managed to go back to the support this low was higher, followed by a massive bullish bar. So at this point, I'm leaning more bullish because we were supposed to reach the support. We didn't. This was massive rejection. You cannot really take any setup regardless because it is just so cluttered, so neutral. Just stay out of this. This is where you can get whipsawed. Just wait for something clear, trading range, and eventually the bias get a little bit clean. You can see, just follow the short-term channels and always remind yourself what is the main structure. This was a range here, breakout pullback, and a brand new downtrend started. And you may be wondering, okay, Thomas, you marked only a few setups. Why are we waiting for these high probability setups? So because when you're trading, you want to find something that works on consistent basis. You don't want to keep chasing it, selling all the way down here. You never know when you're going to reverse. Just like when you settle here, you can see trap reversed. You want to sell where the correction phase will end and the brand new push phase will begin. And you can see what all of these high probability setups have in common. It's a variation of a two-legged pullback or lower high confirmation setup, but notice it is a two-legged pullback at the key entry point. Same thing here. Felt second entry long at the key entry point. You're selling at the trend line at the key entry point. Once again, pullback at the key entry point. This is the place where the major push phase will start, and this is where you're gonna catch the major move. So this is why we're interested to wait for prices for the correction to deplete and take a high probability setup exactly where the push phase may start again. Same thing to the upside. You have to be a little bit careful and buy at the lows. I was really expecting new extreme, but eventually you can see prices reverse, and this was the overall picture. Very nice fitting downtrend. You can see if you're patient, there are a couple of these easy high probability setups that you can take advantage of. This was a really great for second entry long context wise, but just formed bad. And this lower high, definitely tempting because you have clear two legs confirming the trend line. So a more advanced trader could have taken this lower high. So I hope you had a great trading day. If you find the video helpful, like the video, subscribe to the channel if you haven't, and good luck with your trading.